Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, February the 11th. I'm Eric Wilkinson. Yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how those two come in to impact the markets with some of my market analysis. I do the same thing for you folks in these daily market commentaries, but I go a little bit further and talk about these option strategies that I'm implementing into my portfolio based on those assumptions I come up with. And further, for you all, I have streamlined that process in order for you guys to find the optimal option strategy for any given assumption. We don't just pick option strategies out of the hat for a bullish assumption. We're going straight to the long call. No, that's not how we work here at Pro Trader Strategies. What we do is we look at this underlying that we have a directional assumption in and then go following our roadmap to find the optimal option strategy. If it's high volatility, maybe we take a right. If it's low volatility, we take a left. And then that will lead us down to that strategy for our directional assumption. All right, so without further ado, let's get on with the economic data, see how we're doing in the markets, and talk about what we have going on in my portfolio. All right, so across the pond, not really a whole lot to talk about, but here in the United States, we got the unemployment claims coming in at 793,000, expected to be 755,000. Also a revision to last month's number, up quite a bit actually by about 31,000 claims extra than what was expected. It was last month 795 now, or sorry, 779, and then it was revised up to 812. So not really a good look on that number. Also, we saw that happening, starting to show up with that non-farm payroll last Friday, remember. Yeah, the unemployment rate did dip, but we weren't seeing the hiring, and some of that probably had to do with maybe the discouraged workers. Well, that did show up a little bit later. There are a massive amount of discouraged workers, which means they're not showing up in the data points, but also a revision here with this data point on the unemployment claims is starting to not really paint such a rosy picture about this recovery. Mortgage delinquencies less than what we saw last month, 6.7%, expected to be 7.6%, or it was 7.6% last month, so that's a good thing. We also have a bond auction going on today and a continuation of the bank holiday for China. Finally, natural gas storage is coming in at a build of 171 billion cubic feet, expected to be a build of, drawdown, not a build, a drawdown of 171 billion cubic feet, expected to be a drawdown of 180 billion. So not using as much natural gas as one would have expected. That should probably be a little bit bearish for natural gas, which has been driving now that the worry of fracking creates natural gas really as a byproduct. That's why we've really seen this massive amount of natural gas come into the system over the last several years. The worry is that inventory is going to start slowing down, and natural gas being a byproduct of fracking, that means it's relatively free to pull out of the ground, and they are a lot of times just burning that natural gas off because it's not cost effective to build the infrastructure around that because it's so cheap of a natural resource. All right. Crude oil. Yesterday, right after the market commentary, traded as a new high, 52-week high, trading almost $59 a barrel. We were talking about as soon as we got above our 50 Fibonacci, which lined up with $54 a barrel, that 60 handle was more than likely to get tested sooner than later, and we're seeing that today. Yeah, yesterday, last couple of days, we've got these topping patterns, but yesterday created a continuation pattern. Looks like we are going to test that $60 a barrel relatively soon. Gold futures are coming off today, and that's despite the fact that we're seeing other assets associated to flight to safety doing very well today. You can see Bitcoin trading 49 all-time high today, while gold futures are starting to sell off. I would have expected to see more strength in gold futures getting above this little trend channel here. Now expecting to see a little bit more overhead resistance here right around that 1860 area, but a bump up in there would make that 19 handle look pretty sure. I am still long GLD based on a bullish assumption in gold. Not working out quite yet, as everybody and their brother seems to be flying to Bitcoin these days. All right, bonds coming off, albeit slightly. We could call that unchanged, but the equities really not doing a whole lot today. You can see the Dow Jones Industrial Average is up 35 on the day, and we did create this intraday high, so that is a solid number. Now, again, we were looking at some topping patterns across the board in equities, but not getting confirmed, especially with that new high today. That does not confirm yesterday's topping pattern here. It breaks that pattern unless we were possibly to settle below yesterday's low of 31,119. So something right below there that would make that look a little bit more of a confirmation. But at this point in time, there is no confirmation and it seems to be breaking that pattern. And here again with the NASDAQ up almost 100 points, 93 on the day. Again, you can see coming very close to printing this high, which was printed in the overnight session. But one thing to note here is this was looking a little toppy, not getting confirmed again today as that is moving higher. And same story here over in the E-mini S&Ps, again looking like a topping pattern with this doji here. And then today we are in positive territory by about 10 points, so not getting a confirmation. We would almost have to see this now really settle below all of yesterday's bottom wick, and that would be the case for this as well. So talking 38.77 would be a print that would be, or a settlement would make that then look like we were going to start to roll over here. Breakdown of the mini S&Ps shows an inside day, really quiet, lack of volume going on here in the markets. A lot of that could be having to do with China being closed as well. We're going to see some less than robust volume when some of these major countries are shut down for banking holidays. That's probably going to be the case again today here with the E-mini S&Ps setting up for a big inside day, big boring inside day. And with that being said, I haven't done anything. I am trying to get out of some of the covered calls that I have going on in like Home Depot. I'm looking at trying to get out of that. TLT was just keeping an eye on that because remember I put on a bullish trade in that. Home Depot though, I have some covered calls on in here. Those are very close to being worthless at this point in time. If you guys remember, I have on the March 210 long calls in there. And then I started doing covered calls against that, rolled those out to the February. At this point in time, I collected $2.16 for that, lowering my overall cost basis on this trade. But right now, those February 255 or 295 calls are trading 25 cents. So very close to a point where I'm going to be looking to get out of this, probably start considering working a bid of, you know, right around somewhere below 20 cents on that, maybe 16 cents, just to round it off to an even $2 on that trade. But I am looking to cover that covered call trade and IBM, which, you know, on my covered calls in IBM are at the 125 handle, and I sold those originally for 95 cents. They're trading around 35 right now. Actually, 35 is where they're trading right now. So keeping a eye on those covered call trades there, just to maybe cover some of those and lower the overall cost basis. But that's all I've got. Home Depot and in IBM is the trades that I'm trying to look, that I have these long calls on and have covered call trades against them. IBM. And as you can see, both of those markets coming off a little bit. That gives me the opportunity to get out of these short calls relatively quickly. Plus, we have really low volatility. So I want to get out of those as quickly as possible. And that's about it, other than we do need to take a moment to go over our disclaimer, as we're an educational company. So please take a moment, know your risks, know your rewards, and know what we're getting ourselves into when we're trading options. There is the opportunity to lose money as well as make money in trading futures, options, and stocks. All right, so make sure you go over this disclaimer. If you can't take that, take it easy.